BC writes, I am on trial with PowerOp, but I don't see anything while clicking on covered call or any tab, meaning not able to see my ticker. Okay, the system doesn't know what ticker you're trading, CC, unless you enter it into the portfolio as a position or you enter it into a watch list. But that doesn't mean it's going to come up in the covered call search. So I go into covered calls and we have a variety of different tools. The monthly picks of the day, the weekly picks of the day, of course, CC. Those are just based on criteria that Ernie tested and established to find positions that match his criteria for what he found to be successful using weekly covered calls. Here's the 3 that matched at 1 o'clock Eastern search time today. And the monthly picks of the day at 11 o'clock this morning. Usually open these positions on Monday. Now I go into the search tool, as we saw for bear call credits and bull put credits. What the search tool does is it scans across the universe of options to identify positions that match our default criteria that you see below. Your ticker might not be in any of the default searches, the monthly picks of the day, weekly picks of the day, at the money initial values, because the system doesn't know what your ticker is. And if it doesn't match these criteria, if your stock's not above the 50-day moving average, if the return isn't at least 3% if assigned on this default search with a greater than 4% downside protection, you won't see it. Okay? How would I look for a covered call on a stock that I own right now, either with my cost basis or in general, that match my criteria? There's 3 ways you can do it in the tools. Under covered call, I'd go to search by symbol. Now, this is sort of an older tool that it was designed, it was called the one strike tool, where it would just show you the 1 strike in the money and 1 strike out of the money. You see this in the search by symbol view for covered calls, CC, and for naked puts. But let's just put an Apple. I can put in up to 15 symbols per view. So let's just put an Apple, Tesla, AMD, for example, one that I'm in with the married put position. And let's just submit. So now I see the stocks at 172.82. I'm looking at November expiration, standard November expiration, and I'm seeing the slightly in the money 170 strike and the out of the money 175 with what I'd want to see for the downside protection, percent return if assigned, and I can change the columns to add in things such as probability of assigned, open interest, and more. Okay, so if you just really focus on, just the at the money, slightly in or slightly out of the money, when you go to covered call, you want to see by your symbol, just click search by symbol. And you can put in up to 15 different ones. Another one I prefer to use is the option chain. And we'll just use Apple as an example. Now, of course, I could toggle, I'm sorry, CC, I could toggle the expiration once there in that search by symbol tool. We didn't show that. But when I go to the option chain from the covered call view with my particular symbol, I can toggle between the different months. Let's go 14 days out in time to November 3rd. Wow, it's only 14 days to November 3rd. I can't believe it's only 11 days to Halloween. I haven't even finished setting up my decorations yet. But the reason why I use this tool, CC, if I'm looking at a new position, is on our option chain, whether you're looking at the call chain or the put chain, we show you the return, the important returns if you would enter this as a covered call right now. The downside protection, percent if unchanged, percent if assigned, and then I can choose to add the annualized. I can also see the theoretical probability. So I compare the returns of the in the money, at the money, and out of the money covered calls for my position based on, hey, do I want a little bit higher downside protection with a better probability of getting assigned and earning this 1.7%? Or do I want to hold the stock longer term? And okay, I'm maybe okay with just the 1.4% downside protection. I might make 4%, but I just want to sell this call month by month and have lower than a 30% probability of being assigned with the stock moving above this position. Of course, if it does and I wanted to hold it, I'd continue to roll it. And I can use the PowerOptions tools to help me with that evaluation. Speaking of which, another thing that I might use, let me just go into the portfolio. We're going to set up a new portfolio very quickly, CC. And we're just going to call it Covered Calls October 20th. I'm sorry, let's change that, CC. Let's just call it Stocks October 20th. And I'm just going to start off with 25K. Why not? nice round number. Copy that over, and it doesn't matter the date, but let's just say we started this on the 10th. Let's save all changes. Did I put 2,500 on that second one? I'm going to have to edit that if I did. Nope, 25,000. Fantastic. All right. Now, let's say that I own Apple at a cost basis of 165. So I'm just going to enter a stock position. It doesn't have to be an option position. I'm going to put in 100 shares with my cost basis of 165. All right. And there we go. So here's my stock. With my cost basis incorporated to the system, I'm up about 4.8%. Anytime you're tracking a stock position, naked put, covered call, credit spread, debit spread, married put, collar trade, you can use the more information button here to link to position actions and then position analysis. Whether it's an options trade, whether it's just a stock trade, you'll see just a basic profit and loss chart, current liquidation value versus future expiration value, and then roll out opportunities based on your cost basis. Hey, if I went ahead and sold, say the November, let's go closer, November 3rd, 175 call with the current stock price, you get 355. My percent of assignment would be 8.4% with only a 41.3%. I could convert the position into a collar to have a negative max risk, a bulletproof trade on the position. That's what negative max risk means, while still generating some premium against the position. Now, it's great to see things numerically, but if I see a rollout opportunity, then click the more information button next to that opportunity, go to simulate trade. This will give me a side-by-side comparison, before and after picture, what my current stock position looks like versus what the new position would look like with the covered call. And then, of course, the graphs here down below of my existing stock position and the new covered call, and the profit and loss here at the current position at different stock prices, and then the new one on November expiration as well. So those are the three ways. There's actually a fourth way that's a little bit more involved, but we might as well take a look at it as well. But just to review, when I do covered call and I want to look for covered call opportunities on my stock, I can use that search by symbol to hold over from the old one strike tool to show you one strike in the money and one strike out of the money. You can compare the downside protection, percent return, and probability. Using the option chain, you can compare multiple strikes, and in both you can compare multiple expiration dates to see which one best matches your annualized goal, if that's your needs or not. You can use the straight search tool as well. So I'm going to go into search. If I want to look for covered calls on my security that I own that are under 30 days out in time, are slightly out of the money, but are still offering at least a 2% time value, what I'm going to do is go into the search. I'm going to clear filters. That's going to empty everything out. Don't worry, I can always toggle back to any of the defaults or any of my saved searches. We're going to go to lists. And let me see if I have it here. Okay, yep, I have Apple here. But what I can do is you can create your own personal stock list. Just click on Create and Modify Stock Lists, and then Create List on this field. And you can call it My Stock or My Stocks, or not New York, My Stock or My Stocks. And I'm going to put in Apple. What did I do? AMD. Tesla, I think, was the third one I put in. And let's just put in IBM as well. Okay. Let's just go ahead and create that. Oh, let me call this My Stocks October 20th so I can find it. I think I have another example in there where I saved it as well. Okay. Now that I've created the list, let's go ahead and close the window because that was going to refresh the page. What did I say, CC? I want to look for positions that are maybe 10 to 30 days out in time on my stock or my stocks that I just created a list. You can put in one stock. That's perfectly fine. You saw that with the Apple one strike view. I said I wanted a minimum 2% time value. I want it to be out of the money so that I want the call to expire worthless, let's say by at least 6% out of the money. And I'm going to look for a probability of assigned of less than 45%. I want to see some option volume and some open interest. Now, I'm not going to be concerned with the minimum option bid, minimum option premium, because I'm looking for the return of time value, or I'm looking for a downside protection of at least 3%, let's say. That takes care of it. I need to need to worry about the monetary view. Now, I don't need to worry about the stock technicals or the stock fundamentals in this search because I'm screening just against my 4 stocks. My stocks, okay, so I have my 4 ETFs and my ETFs, and there we go. We're just going to call it my stocks October 20th, and let's submit the search. Only one matches that criteria, 10 to 30 days out in time on those 4 securities with a downside protection of at least 3%. 6% out of the money with some activity today, and a probability of being a sign of less than 45%. Let's take out that downside protection. Some of them might only be about 2%. Let's submit it. There we go. Now I've got AMD. Why didn't they match? Look at the downside protection. There was only 3 positions that had that minimum 3% downside protection. And it's the computer. So if I put 2.9%, we would have seen the 2 AMDs. These were filtered out because they didn't match. Why is that important? Well, the reason why I'm saying that's important, CC, is because if you're just screening against a particular stock in the search, using the search to narrow down which ones on which various expirations match your specific criteria, you want to keep it as simple as possible. Just put in the first basic 3 or 4 criteria that you use. If you put in too much, hey, I also want which one of my 4 stocks is currently in an uptrend. Now, we know what the market's been doing. So let's say stock above the SMA 20. Yeah, none of them are currently above their 20-day moving average. I'm restricting it too much. I want to keep the basics and keep it simple.